Good turnaround Tuesday, Warriors. Let's see if that happens. How you doing, Mike? Bran? I'll try and tell you what's going on. I did know today it's not as clear. Hi, Kman, Sinatra, Hugo, James, Ryan, Michael Bergman. Haven't seen you in a while. Victor Negron, Nick Victor, welcome to F.A.C.E. Ingmar, Blake, team. Okay. So yesterday, Kman said that BOJ would come in to support the Nikkei, which was a great intuition or just knowledge of what could happen. And I believe that they had to use circuit breakers on the upside. So they do what you expected them to do? And good morning, Kman.
Hey, good
How are
morning,
you?
Dale. Good morning, everybody. Well, nothing has been said officially, but those sources between between brackets. It seems that it is possible that they did some price keeping operations. Yes, they had this emergency meet. Well, emergency. They had this meeting between F.A.C.E, Bank of Japan, MOF. We also heard from Mimura that they were talking about the market. So it is possible that they were trying to keep it up, at least for the time being. So yeah, we had a 10% rally on the Nikkei. It's cooling down a bit, but still holding relatively okay. So yeah, I mean, and I said on the Flow Show as well, it occurs to me that Japan will have to make a decision. They can't save the whole world, meaning that they probably saved the currency now for a good while at least. They did seem to have saved their JGB market because forcing shorts to get out of it as well. But will they save the Nikkei and the topics? And as I said as well, it's for investors the very important thing to invest in a country which they want and what Kishida wants as well. They want to create this virtuous cycle. You need your equity market, you need your asset markets to at least be stable. And so what are they going to let go? I think that they may be thinking about ways to keep the Nikkei up. I wouldn't be surprised if the next sessions they step in, buy more ETFs, or come out with some more comments over there.
Yeah, we should clarify that this is not new.
No.
It's not something they've just pulled out of their trick bag. They've been doing it for years. So they must have made a lot of money on the long side while we were in a parabolic move up there. Wonder if they took profits. You think central banks ever take profits on their programs?
Normally not. But
No.
we could say in a way that the Bank of Japan did on their dollar
Yeah.
yen because they have been intervening for 2 decades on the other side and having
Yeah.
intervened now to sell dollar yen. We could say that they have been taking profits as well because they bought it down to 80. Remember?
Yeah.
But
So
no, I don't
go ahead.
think they will. I think in one of their reports they said that they may not buy, and well, there was no need to buy ETFs at all. But I don't think that they will reduce any of those holdings anytime soon.
Okay, I just want to point out for people that are fairly new that you don't have to be a genius to come up with targets in markets. So 152 was the big level. I mean, I could pull up a weekly and look left, and that was huge. So, we traded it, or many FX guys, including Blake, bought it down here. You guys bought it, caught the rally, but just simple arithmetic. 162, 152, breakdown under 52, that's 10, 42. So, I mean, it was logical. So, well, can it overshoot? Yes, of course, but it fulfilled this topping formation objective down here at 42. Okay, so if you could add and subtract, multiply, divide, you can come up with these targets in markets. Um, any comment in gold? Gold held yesterday during the liquidation break. This 2360
Yeah.
came in. Looks real key to me.
Yeah, well, I like it. I like the way it held, and also there, I said like this. We've seen stuff like that back in what is it, 2018, global financial crisis, 2022. We've seen this many times. The waves, and get me out of there. Gold also collapses because it just is a way of getting out of all assets. But then most of the time, not all the time, but most of the time afterwards, it puts in a very strong rally. And not calling the end of it. I still think that if there's more pain to take, we could see those high 22s, low 23s again. But I'm getting ready for a potential second, the second round effect. You need to hold something if the rest of the world, and especially thinking about lower yields coming, and geopolitics, I'm still in the camp where we get this second round and take it higher, well through 2500.
Okay. Sometimes I've noticed on the 3 drive, and this was, came off this line. Sometimes on the 3rd drive, what you get is a fractal of the larger formation, and the fractal would be 1, 2, and then we get a 3 up here, and then it might fail.
Hmm.
Anyway, this is really the line in the sand.
Yeah.
It held it twice, so back under
Uh,
this moving averages
And
problems.
I agree. We are not making new highs yet, but if you look at it in a bit more medium term from April, May, we are like we could say
When we were up here in
consolidating,
silver, yeah.
but it's
When we
but
were
it's
up,
holding, yeah, it's holding above
yeah,
2280 in gold. Yeah, silver
yeah.
is different. Is
But
different.
we were dream if you went back in time to here, you would dream of being able to buy a pullback in silver to
Mm,
26,
mm,
right? I mean,
yeah,
back here, I don't think it'll get to 26, but that's a breakout. There's a lot of confluence there. Maybe it takes it out, spikes it, but I think we're getting closer in silver. And look at this gold silver ratio just completely exploded to the upside. So, that'll tell you sooner. That's a daily, but what a move. And, that was kind of a recession move where
yeah. That's your
gold,
risk indicator, right?
yeah. And,
That's your risk
normally
indicator.
the dollar usually goes with it.
Yeah,
So,
but
I wanted dollars popping, but it's not the same chart.
no,
Gold
no.
silver ratio is much stronger. Um, let's move over to Ryan on this pullback in euro. What's your bias? Is your bias to buy breaks here, Ryan?
Um, no, I think it looks like the rally sell up to 110 is valid. Too scared to do it yesterday. I traded euro sterling instead, but we tipped it and it's held. Now we need to hold this 109 area, 108.90, or if we don't, we're going back in the box. It probably means a move down maybe towards 108s. But the marker's set, isn't it? 110, 110's a level. Need
Yeah.
to get back up there, or as I say, we're just going to stay in this malaise that we've been in for several months now. Well, pretty much all year.
Okay. And cable has, you're talking about EG. What a run, right? I mean,
Yeah,
took care of the 85 level. Um, so this is, I wouldn't short this.
I have.
Yeah. All right.
I got
All
put out
right.
the balance of my 85 shorts while I was away. I had my
Oh,
stop tight above 85 at 85.15. I'm trying again up here because this 86, 10, 20 area is a decent resistance area. So I shorted it yesterday, got a bit off, had an overnight TP in for half of it, or the rest at 85.50. Couldn't quite get there. But the pound's looking a bit weaker right now.
yeah.
I'm not sure why. It might be we got a bit of fiscal stuff creeping in from the UK, from the new government, but it's not looking the darling it was a few weeks ago. This move under 127, there's a bit of a zone down to 126. 126 70s is a fib down there, the 50 fib of the April move, and once again the pound's looking a bit weaker than the rest, and that's seeing euro sterling tickling that 86 level.
And commodity currencies, that was a pretty negative day. Pointed it out yesterday before we left. Do you think we're putting in a high here in USD CAD? I think they got almost got all the stops, Ryan. I mean,
I got mine.
Yeah, okay. So I tried it a couple times, but I don't think we got this stop here, 39.78. That goes back to October of 22, but certainly took care of these. Did we get this one?
Yeah, well,
39.46.
What have we got on that?
78, missed it by 30.
Yeah. Well, as I say, it got my stops, as you know. Before I went away, I was trying this on the short side up into that 39 area was sort of my limit, and it got stopped out of that. But that's markets. We get these wild moments. You can't do anything about it. All you can do is control your risk. And,
the night before the crash in Asia, I had resting orders in at 4.5. Last week I talked about I wanted to buy Aussie at 4.5, and then I woke up to all that red, and I didn't get stopped out. So what I'm looking for in Aussie is a 2-week reversal, and that's what I saw at the top in S&Ps and NASDAQ. So a 2-week reversal in Aussie is going to happen on a Friday close over 65.47. So it's doable. We'll see. Any comment on risk? It's pretty feeble bounce that we're getting so far.
Yeah, we're not out the woods, are we?
No.
We didn't. I think the important thing to look at these stocks, and it doesn't matter what stock market you look at, it's all a similar picture, is that we didn't, during yesterday's session, we didn't go back to those lows. So we're building a bit of support here. Those lows are now the new marker. So, down into that 51 level on S&P, that's where you really need to be looking. And for the upside, you just got to look at the broken support on the way down,
54,
52.80s, 53s. That's your close one at the moment.
Yeah.
And then you got a bigger one there, 54s.
That's a big one.
So
So
if you were trading off that on the way down, you had a decent bounce off of it. Now you need to watch it on the way up to see if it becomes resistance.
Okay. WTI, I don't know.
No, I don't know either.
I have a lot of I don't knows today.
Yeah, that looks like it's still in the mix of the fundamentals. I mean, I was surprised when I came back yesterday and found it was diving after everything going on with potential going on with Israel and Iran. But that ISM manufacturing last week looks to have done for the demand side of things, and that's the bigger picture.
Okay, thank you guys.
No
good
worries,
morning,
mate.
Blake Morrow, Pipzar.
Hey, good morning, Dale.
How are you, buddy? So what's on the menu for you today on Turnaround Tuesday?
It's so funny being in the chat room. Lucas, and he's in Brazil. He's like, Happy Tuesday. And I'm like, oh my God, it feels like Thursday. Like, I was like, it was like kind of a shocker to realize it's only Tuesday. It feels like we've had a whole week. It's been such mayhem. So it's nice to actually have kind of a calm day. I'm actually going through all the key levels and ForexAnalytix and updating all the key support levels and resistance levels around, and realizing how wide these yen pairs, how wide these key levels are going to be because of the moves that we've seen. One of the things that you talked about, Dale, is you talked about the Aussie, and I want to go into it real quick. I want you to
All right,
tell me
this
again
is this was
what
key
you
to
think, what
me.
you're thinking here, because I kind of overheard you as I was doing something.
Yeah.
So what are your thoughts again on the Aussie? Because I want
Well,
to.
I'm long from 4.5 because that's where I wanted to buy the third drive, but we had the meltdown and went
Mhm.
to 3.5. But what's interesting is it took out the stops here. So,
Oh yeah.
I was trying to buy it at 78.6, and um, I don't think anyone's long anymore that got long here. They're gone. And it came back pretty good. So I'd like to see a nice candle by Friday. We still have time. A green candle, blue candle, whatever you want to say, and then and my risk is yesterday's lows. I'm not risking any more than yesterday's lows. And I saw you also got long yesterday. Your rationale?
I got long and I already got out. I got long,
Okay.
got out, but I just got long again today and just a little while ago. And my rationale is I don't think there's I don't like to use the term capitulation. You know that
Yeah.
I'm very almost adverse to it because I don't think most of the time we see it. But the moves on over over Sunday, Monday, I
Yeah.
think was a capitulative type of move in some of these dollar pairs.
Yeah.
And because I'm not very constructive on the dollar, I'm looking at and I'm longer term like bullish some of these commodities. And I know it's weird. I say it's weird, meaning I don't normally feel like I want to be long Aussie dollars in a risk off of an environment, but I can't stop helping looking at the price action and that move that we saw on Monday, when we pushed below 64 cents, that was a capitulation type of move. It was very brief and it lasted literally less than 15 minutes.
Yeah.
So, and I wasn't there looking at it. So I wasn't there watching it, but it was enough to trigger a lot of longs to get them stopped out. And you're right. Anybody who was long got stopped out there and probably got some people short because, but Nas or Nikkei's down 12%, and
Yeah.
and well, it was falling just aggressively. You had every market falling aggressively. You had all the yen pairs falling aggressively. You got sympathy selling in the Aussie, and then it quickly reversed. Like I said, 15 minutes, less than 15 minutes, you could barely even get any trades off. So I have a feeling that level that we saw on Sunday is just not going to get tested again. Well,
Like
maybe.
this, you called this a generational low. It was COVID. This is a
Yeah,
monthly. All right.
right,
So
right.
all we've done is, I haven't done the fibs from, this rally from 55 to 80. But, if you look at a monthly, we're probably 61.8 back. And it's like building a higher low, big base. We start
Yeah, and
doing
and
it looks
you're
okay.
right. You're right, and it's not a it's in between fibs, by the way. Yeah, I just looked just because
Okay.
I wasn't sure either. Yeah, we're in between like the 618 and the 78% retracement, but
Okay.
that doesn't matter. I think we're building like a triangle right now, and you're right, it's basing. And so two
Let
senses.
people see your triangle, bro.
Yeah, sure thing. My two cents is I'm gonna be constructive now, and it's unconventional. And remember, this is one of those situations where we are not accustomed to seeing the Aussie dollar rally in risk aversion. So that's not, and I don't even know if we're gonna get risk off. I mean, if you look at the stock market pulled back. I mean, that's another conversation that we can have here with everybody in a moment. But there's the triangle that we're developing, and that spike down. I'm just going to be trading it basically like this for the next week or two. While we're above 64 cents, I don't want to be short. I'd rather be
Yeah.
long. And so I was long yesterday, pulled it off, took profits. I just got long this morning. If you're in the ForexAnalytix trades room, like this is ForexAnalytix. For those of you that aren't in here, you can go into the trades room. You can see I pulled off my dollar yen short from last night. I shorted it twice last night, by the way. Got out of it just about, I don't know, 2 hours ago or an hour ago or so. And then I bought some Aussie, and you can see Bran, he's in there putting in a trade right now. You can see him typing. This is our ForexAnalytix chat room. That's, we a lot of us post, what we're buying and selling there. That's different from the general chat room where we're talking about, everything else. Or that's the Spanish chat room. There's the S&P room. There's the general chat room, where we're talking about different conversations on, how we're going to trade, in this example, the Euro Canadian. I'm looking to buy it pretty soon. And Michael is asking, am I looking at what levels? And, these are the conversations that we have there. But you can monitor what I'm doing and what I'm trading. And same with, Ryan and Kman. They're very good at posting what they're buying and selling in the chat room as well. But while we're above that 64 cent level, I don't plan on being on the short side. Now, if we get below there, I will have to change the way that I feel, and then I'll probably have to go back into the good old, most of you know what it's called, the dollar milkshake theory. If the Aussie is really breaking down below 63.50, the lows that were this weekend, it has probably more to do with very weak data, which we just got past the RBA last night, but very weak data, or it is, risk off, and the dollar does end up catching a bid. And then I want to stop and actually ask really quick the opinions of. I'm going to ask Kman first, because I know he's leaving on holidays for the next week and a half. We're going to miss you, Kay.
Thank you.
Let me ask you this. Over the last, let's just call it 20 years, and you've been trading FX and on bank desks longer than that. But I've been pretty focused on FX predominantly over the last 22 years myself. All I really have known is the dollar is, for the most part, a good risk off asset class. So when the market sells off, you buy dollars, and you get the dollar right, as Dale says, you get the market right. Do you feel that the dollar's role could change based on current environment for whatever reason? What are your thoughts?
It has to do with the US dynamism, because risk off can be a general thing, and then you usually have this initial, at least, or few rounds of dollar demand. But now this time, okay, you take away the yesterday's ISM services, which caused the dollar a rebound somewhere. But this time, if your US economy comes down or gets weaker, we see a lot going on in US yields and US equity markets as well. If your US economy weakens, that dollar demand is only going to last for a certain time, and that's where perhaps the dynamism can be different after a certain time. We've seen that in the past as well. Sometimes the dollar got a bit, but then, as long as your US economy doesn't falter, it's going to stabilize, and the dollar could actually maintain that bit. But if your US economy, which is a very dynamic economy compared to European economy, for instance, if that continues to weaken, and perhaps more than for instance, your European, that dollar bit is waning after a while.
Yeah, okay, that makes sense. Ryan, is there anything you wanted to add regarding that? Because about you could call it the dollar milkshake theory or whatever. But how do you feel about the dollar? Should equities come off? Do you think the dollar is going to catch a bid as well?
Things are changing again, because it's really all about what the Fed's doing and what rates are doing. This phase is really what we're talking about. So I'm not looking really at the dollar from a risk perspective. I'm looking at it from what the Fed's doing, what the economy's doing. And we saw a perfect example with the ISM yesterday. The market getting itself all bearish over the NFP and everything, and hiking rate cut expectations and whatnot. And what happens in the ISM? The employment number goes into expansion for the first time in 5 months. You know, it's typical. When all the market is looking down the hole, a bright light shines in their face and blinds them all. And but is that enough to turn this dollar weakness around? Is it enough to say, you know, you don't need to be as dovish on the Fed? We've seen a bit of reversal in that. I think there's still some room to go. We're still pricing heavily 75-80% chance of a 50 pip cut in September. I think that's way overcooked. So there is some room to see the dollar gaining if those expectations unwind a bit. And as I say, that's all I'm looking at more than what's going on in risk.
All right. And speaking of the dollar, just real quick, you know, if you guys haven't seen it, the dollar index bounced right off of triangle support. It's that the red dash line that you see here. But there's a longer term trend line. I want to show you guys this. Dale, you're going to appreciate this. If you go back to, you know, beginning of 2000 or, you know, early 2021, this longer term trend line, all we're doing is we're bouncing back to the underside of it. So, sorry, I did not mean to do that. I was looking for my mute button and I couldn't find it in time. Sorry, guys. Woo! I don't know where that one came from. Anyway.
Ryan Matthew wants to know why you're involved in the riots in the UK, and if Kman is taking a vacation so that he could participate.
I've enough to do with rights in my own house, let alone on the streets now. Trying to keep the kids engaged to summer holidays. Every day's a riot.
I'm not going to participate. I'm fleeing the country.
Yeah,
there you go. He's going home.
Regarding Matthew's question, I don't know if they're impacting sentiment. I think more the fiscal side of things is starting to pick up. Obviously, the honeymoon period for the new government is coming to an end, and now even the BOE mentioned it last week. You know, they're waiting on the October budget just to see what the fiscal plans are, and the market is too. Are we going to get big tax hikes? Are investors going to be happy with that? I think that's probably starting to creep in, but it's a situation to keep an eye on.
All right. Hey guys, real quick, I just want to reiterate these yen pairs, and I'm, you know, just because I know they're really in focus right now. You know, if you look at the euro yen, it's a longer term 38% retracement. Sterling yen, it's kind of I guess in between. You could probably go all the way back here and say we could still reach for further, but I'm looking, you know, that we're just kind of back in a congestion area. Aussie yen at the 38% long-term, 38% retracement. These are weekly charts. New Zealand yen, 38% retracement. Canadian yen, also 38% retracement. You know, peso yen dove below it during the mayhem on Friday or on Sunday, excuse me, but Sunday, Monday, but we've popped back to the 38% retracement. Swiss yen is, you know, just kind of holding actually in a pretty strong ascending channel because both Swiss and the yen are fighting for, you know, safe haven status right now. So, you know, you can see it's not a lot of movement there, but we'll go look at the dollar yen really fast. And the dollar yen has seen a recovery, but it's really stalled at the 146 level, which is the breakdown point. I did make a YouTube video or a Twitter video or whatever, a quick video at the end of the day yesterday. And that level's, you can pretty much trade against it right now, but I would, you know, now that we've held it for 24 hours and, you know, you could argue that there's an intraday double top there, you know, that if we break above 146.30, 35, 136.40, that's the 24% retracement. The next move will take us back towards 150. So there's a nice little, you know, level right above us that if equities continue to recover and you see these yen pairs pop back above this 146.40, we're going to have a quick move and a nice little squeeze higher, you know, catching anybody who's been playing these to the short side, because, you know, a lot of people are shorting into this move. I mean, that's a given that everybody was looking at the same thing that we were looking at last night with the yen. There's many people leaning on it. So a move back above that resistance is going to, you know, catch some people wrong-footed. So just keep that in mind as you navigate over the next couple of days. Kman, since you're going to be leaving, and by the way, trade balance is coming out right now. Mandy just said I'll pull it up on ForexAnalytix. And I know Dale has an interview, but Kman, you're leaving for a week and a half. Any last minute comments? And there's the trade balance data came in a little worse than expected. Any last minute comments before you go?
I think we are going to retain a fair bit of volatility, but I would say, it's going to be more volatile than fresh breaking levels. I think that's what I feel. Volatility is going to remain high, but I'm not sure if we are going to break any of those lows or highs in the euro, for instance. I wouldn't think so.
Just have a chop fest while you're gone.
Yeah, I'd say so, but it could get very, very wild in between, like we are seeing, 200 pips dollar yen in the space of an hour. That's going to be the new norm for a bit.
Yeah, and that means that, hey guys, well, we're in a more volatile regime, smaller positions, wider stops. That's the way if you're swinging for the fences with bigger positions, you can remember you can be stuck on the wrong side of something. So it's okay to be wrong. Don't stay wrong. Ryan, any last minute comments before we turn it back over to Dale?
Nope.
All right. All right. Well, gentlemen, thank you so much for being with us. And Dale, I know you're bringing back on Kirk since you had to reschedule him. So I'm gonna pass you over to him. Remember, guys, be in a community like ForexAnalytix, so you can chat with other traders like myself or Ryan or Kman or all the traders that are in our community. Just have a place where you can talk back and forth and not have to worry about being trolled on the internet, that type of stuff. We have a really good community. I was talking to one of our traders yesterday. His name is Vincent, and he is ex-military. It just retired, and he just retired after 20 some odd years of service. And he's like, I love the community in ForexAnalytix because it's like the camaraderie that I had with my brothers in arms for 20 years. And he's like, that's the way the community is. And
yeah, it's a battle. I mean, look, we're all in the foxhole together.
We are, and we're just all pulling for each other. It's not like a competition. It's not like, I got to one up anybody. No, we're all just there trying to make money and share ideas and, and keep politics and religion out of it. And it's just, and your occasional Netflix a series when we're really bored. And then that's it, just having.
And when you guys say, I hope you caught it, you mean it. Not like, I hope you caught it, meaning, code. I know you missed it.
Exactly.
That's how it is out there. And, someone makes a great call and they go, oh, I hope you got it. But they know. Anyway, look, there's Kirk. Listen, Kman, have a great trip. Wherever you're going,
my friend.
You'll be missed, and enjoy yourself. Smell the roses, bro.
Thanks, Dale. Have a good one, everybody.
Okay, so Ryan, thank you today, and I'm grateful you're going to be here. You guys are a good team because you're always backing each other up and give each other a chance to recharge your batteries. Anyway, my battery is pretty low. Kirk, can you recharge me? It's great to have you back.
Yeah, how are you doing? Should I have my video on? I'm not real good this morning.
That's fine.
I have some stuff to share with you if you like.
Yeah, great. I see you're pretty active, Kirk, on what is it, Periscope or the Twitter streams, X. No?
Yes, I've been on Stocks on Spaces. It's an X program.
Yeah.
I'm not in love with any one platform, but I do what I can to try to stay out there.
So how are you handling the recent turbulence? Do you think that it's just going to we'll just get through it, or are things changing?
I think that, and I wrote this in an article that should be published on Seeking Alpha today, that the what I call traders' narratives, are so short term in nature that if you back away from them, it's easy to see that they're usually wrong. And and I'm not saying anything about this service or any other service. It's just that there's a stampede of traders in one direction or the other, depending on what's going on in a particular week. And I'm an investor, I don't do a lot of trading, although I'll tell you a trade that I did do. And I think that people need to take a step back, see the forest for the trees. There's actually a pretty good service out there called that, by Luke Roman, and understand some first principles. And the first principles are these. One, the United States economy is the most important economy on the planet, and it happens to be, for the big countries, the strongest economy on the planet. Our ability to influence things around the world is unmatched. And to think about the dollar in a way that you might believe that it's going to get destroyed or fall off a cliff is the wrong way to think about it. The way to think about the dollar is that it is managed in a range that will help the United States either quell inflation at home or drive economic development everywhere. Right now, and I'm going to pop up a chart that I've been keeping for a long time, the dollar is coming off of a peak, and it's working its way towards an area right around 100 on DXY that I've been calling the millennial dollar. If you take a look at the demographics, and that is what drives economics, our demographics. I think anybody who hasn't figured that out in the last 30 years hasn't been paying attention. But demographics drive the big overall economic picture globally. Young nations with technology, with rule of law, with resources do the best. And when you start taking away things like resources or technology, or you have an aging population that weighs on the dependency ratio, they do worse. You can take a look at every country out there and you can break it down by those handful of factors. And what you find out is that the United States is probably in the best spot, at least for a while longer, because we have the millennial generation, which is now larger than the boomer generation, driving the economy, and they're just entering their peak earning years. The Gen Z generation is a bit smaller, and what we have to hope is that, and there's a big glut of kids that are young right now, we have to hope that the United States can keep its population up so that we can not have to run into the dependency ratio issues that everybody's afraid of, and which have been driving debt in the United States. If you take a look at the dollar here, you can start to see that there's two potential ranges.
What's the dependency?
What is the dependency ratio? So
yeah, what is it?
Think about all the people in the United States that are going on Medicare and Social Security. So it's the ratio of people on government social welfare programs versus how many people are working, and really what GDP is.
Okay.
So there's a lot of nations where that is, their budgets are just becoming too big for what their economic output is. So there are only a couple of things you can do. You can do austerity and have yourself a nice 10 to 20 year depression, or you can try to deflate away debt and grow the economy fast enough so that you can create the tax revenues to pay all the bills. And in the United States, even though I look at things from a Keynesian slant and Luke Groman looks at things from an Austrian stance, I would say that I agree with him, and I have agreed with him for a long time, that the United States has to see growth expand and for asset prices to go up so that when people sell their assets, and there's a couple tweaks in the tax law that should be made because there's a lot of tax avoidance. But with higher asset prices, we know the tax revenues go up. There is a direct correlation. That's the one chart I didn't have for you today. But as tax revenues go up, you can pay your bills. And what we are going to see is the government and the Federal Reserve and Congress create a situation where asset prices continue to go up. Now, the Austrian or austerity crowd that comes from there would say, no, just tighten up all the spending. And the problem with that, and you can see it everywhere that it's been tried, you can go back to Germany, you can go more recently to Greece, is that austerity leads to depressions, and they are not one-time fixes. They are problems that take a generation nearly to overcome, and very often lead to violent conflict. So whether it's at home or there's an actual nation to nation or world war. So what you should expect is that the Federal Reserve and the Treasury are going to loosen up on financial conditions. They're going to allow the dollar to weaken a little bit to the bottom of its range, whether that's down around 90 or lower. It could go, but I think right around 90 is about where you'll see the dollar put in a low in the next year or two. It is a big move. And for the trader, understanding what it takes to drive asset prices higher so that we can pay the bills is important.
You know, Kirk, I want to ask you a question. Maybe you have the answer. A lot of people don't. So, you know, one of the platforms of Vance is we need a weaker dollar so that we can export more. And, you know, just because people want something doesn't mean they're going to get it. How do they engineer for a weaker dollar should they take control? How do you engineer it? What do you do? Just rate? Is it all rate driven or what?
And QE.
Okay.
Yeah.
So
I mean,
could it be intervention, or can you just come up with, you know, I remember when countries would just have an overnight devaluation of their currency.
We're the United States.
Did that happen?
Not in the United States.
Okay, good.
No,
you always make me feel better.
No,
you always make me feel better, bro.
Yeah, no, the dollar is like Doritos. The dollar is like Doritos. We'll make more.
Okay.
Yeah.
All right.
I mean, anybody who gets on the whole dollar devaluation thing from the standpoint of just waking up one morning and saying it's different is
that shift.
Well, yeah, he should, and he's been wrong forever. So, you know, I mean, yeah, gold has doubled in the last, 12 years. But you know what? Well, you know what's gone up more than gold? Yeah, almost everything. So, I stole one of his analysts. His analyst laughed at him. So, you know, the idea that we're just going to devalue the dollar is silly. Now, what's not silly is that in 2029 and 2030, we are going to be at maximum boomer retirement. So the last boomers get on Medicare, and almost the last boomers get on Social Security. There's going to be a handful of boomers who, don't take Social Security till they're 70. But for the most part, boomers will be on Medicare in 2029. That'll be maximum Medicare dependency. And most of the boomers, almost like 90 some odd percent of the boomers will be on Social Security by then. So that is 2029 and 2030 is the peak of what we have to spend on the boomer retirement. And from that point on, it flattens out and then goes down. Why? Because what happens to people in the long run, we're all dead. So between now and about 2030, there's going to be volatility because you're going to have competing forces of austerity voices fighting with the people who say, we need to just keep printing money and keep having things go up. Now, in the last 2 years, we have not been printing money, correct? The M2 money supply has come way down. And that is unusual, but was coming down off of a gigantic peak. And that is something that I don't think everybody understands. When you see the viral images on X or wherever you see them now, is, you know, you have this, oh, look, the M2 is falling more than it ever has, and therefore we're going into depression. Well, no, because when you take a look at where it came down from, that huge peak, which you guys just talked about from COVID, you're like, okay, we started at an unusually, unprecedentedly high level, and now we're just basically getting back to level. In fact, I can show you M2 if I am good enough to find it. Here you go, M2 money stock.
So do you attribute this correction in the market has been, you know, people will say, you know, it was the yen carry trade unwind. Is that your
Yes,
take on what happened here?
so there is a big rotation going on for sure. Japan, which is the real good comparable for the United States for the next 20 years, is what they did is they had QE forever, right? And now their demographics, their dependency ratio is finally flattening out, and they're trying to figure out how to navigate going from increasing dependency ratio, more people on the dole, or on benefits, or on entitlements, or on social welfare, whatever you want to call it from your ideological slant, and now it's flattening out. So Japan is trying to think, well, so does that mean that we stop buying our own ETFs with government money that's been printed? Do we raise interest rates a little bit? And the answer is a little bit. However, it's a generational thing. It's going to take a decade to maybe 15 or 20 years for everything in Japan to kind of normalize from this gigantic demographic shift of getting older that they had. And it becomes a drift rather than a curve. The same thing is going to happen in the United States, but it's not going to be as pronounced, and it's not going to last as long because, again, we have that millennial generation behind the boomers that is going to generate a lot of wealth. And ultimately, the boomers, you know, they start to die. So
the millennials end up with it anyway.
Yeah. I mean, I talk to my millennial friends, and they, you know, I have paradigms for or kind of 30,000 foot overviews of each generation. And I will say the millennials who grew up in a pretty good time in the 80s and 90s walked into, in their early adulthood, 9/11 and the financial crisis and QE and all the things that weren't in the history books, right? Everything that they had studied, everything that they had known changed as young adults when their final hard wiring was, you know, going in their 20s. And now they're in their 30s and 40s, and they've worked, but they have kind of become a cynical, passive aggressive generation, but they do generally keep their eye on the ball. So I don't worry too much about the millennials, other than the whatever it is. There's a million millennial men who have never worked full time, and they're all schmucks. But you know, the rest of them are pretty good, especially the women. And I think that they are going to charge more for their services. You've seen that, the way they jump jobs for more money. And I think that when they take their inheritances, because I think a lot of them are going to inherit money. We know trillions of dollars are probably going to move. I think they're going to be pretty good stewards. So, you know, I don't know what happens to the generations after that, but I'm fairly impressed with the millennials, and they are becoming the big breadwinners in the economy. So you have to follow their patterns, right? You have to understand what they're investing in and how they're behaving and what they're really doing. Now, back to M2, you can see that it came down here recently, right? We have not been printing money for the last couple of years. We actually just started again in May. So, you know, you had this big spike. It never had come down like this before, right? It never come down like this before. And everybody says, oh, that's going to cause a recession or depression. Well, but the thing is, it never jumped up like this before either. So we are basically
Plenty of
close,
liquidity.
and we're close to the trend line. So ultimately, money supply has to start going up again, and it is. So if you take a look at what the Treasury did in May, what are the two things they did in May? Most people can tell you that they cut back on quantitative tightening, but the Treasury Department, at the Fed, and the Treasury Department started a buyback program at $15 billion a quarter, so small change. But they just doubled it to $30 billion on August 1st. So you're going to see more Treasury liquidity, and the Republicans in Congress yell at, Janet Yellen, say, "Oh, you're trying to juice the economy." No, this is part of a long-range plan to get through the dependency problem that we're going to have that's starting about now and is going to run into, sometime into the late 2030s. So we're going to have roughly a decade, maybe 15 years, where we have to find ways to pay the bills. And Japan did quantitative easing for 30 years. We're probably going to have to do it for 10, maybe 15 if we decide to spend money on vacations. So I think that it's important to understand all these different things. If you go over to Apollo, and they have a chart in here somewhere about the correlation of liquidity to the stock and asset and real estate markets, and I think it corresponds to Bitcoin too. Is one, we don't really see any reason why people would be afraid of recession. The unemployment rate ticking up was entirely new people in the workforce, a combination of people running out of their COVID money, and I have that chart right here. So people started running out of their COVID money, pretty dramatic, right? And now they are coming back to the workforce. Plus, you have immigration, right? We had 4 or 5 million new people into the workforce, and that drove inflation down. So there was a huge benefit from inflation on inflation from immigration. And what we can see is that job cuts are not going up, right? You're not seeing big layoffs that aren't offset somewhere else. So we're not seeing a big uptick in layoffs. Now, if this number surges up and gets to that 100,000 range, then you should be concerned. So you don't want to see this break out. Now, if it jitterbugs in here, no big deal. But if it breaks out, then Houston, we have a problem.
All right, so Kirk, tell me how you're positioning yourself for this narrative you've presented today.
I think that the liquidity that's coming is huge. I think that it's going to be a combination of the Treasury and the Fed. And with more liquidity, you should be buying the dips on the best stocks. And you should
bonds?
Bonds suck. So just, I bought 2 and 5 year treasuries a few months back. I'm selling them now, and I'll be selling them through the end of the year probably as we get opportunities to buy. But this is a chart that if you're a stock person, be aware of. Every quarter we have that buyback blackout, and it's about to end in 2 weeks. So we're going to start to see big corporate buybacks for the cash-rich companies, which are basically QQQ and a dozen others.
So you'd be looking to buy this break in QQQ.
Absolutely. I already nibbled in once. I told everybody on Saturday morning that the blow-off bottom might be Monday morning. It seems like that's what happened. It doesn't mean that we can't jitterbug around for a few weeks. Historically, and I wrote this article over at my website, Fundamental Trends, is historically, and you go to, it's in Trader's Almanac, you can see that during election years, Q3 is choppy every time. So we were pretty much ordained to have a choppy Q3, the combination of the election and seasonality, and having a big first half of the year. And now we're getting some consolidation in the stock market. And I think that's all it is. I think the Fed might be one meeting behind on rate cuts. I honestly thought that they should have cut rates over the winter when inflation started to come down, but they held off. So we will see.
But
We'll
you
see.
know,
We'll
everyone
see.
keeps
They're
talking
close.
about the Fed, Kirk.
Yeah.
I mean, the 10-year has gone from 440 to under 380. So I mean, the market's not waiting for the Fed. The rates have already come down dramatically in the 10-year. So
Right.
the market's operating in the basically the same level it would be if we had a half a point cut. It's already priced in.
Right. The big guys with
So
the
it's
big
priced
money.
in.
Yeah, the big guys with the big money,
So why
Warren
is the
Buffett.
market ignoring that? Why is it ignoring lower yields and actually help propel lower yields? The
Because
market.
that's what markets do, man. I mean, the long-term rate is relatively anchored in a narrow range, right? From 3.5 to 5.5. And you get these narratives that drive it. And the big guys, they were buying these bonds months ago. Warren Buffett was buying these bonds months and months ago. He's the biggest holder of 2- and 5-year treasuries. Do you think that with his $277 billion in cash and his bond portfolio going up, do you think that he's not selling those bonds and turning around and buying the dips on stocks? I would posit that Berkshire Hathaway, you're going to see them spread their bets. I think you're going to see them get into the mid-cap market, a lot of smaller bets, a wider range of them, because it is easy to identify with a screener, any simple screener. You can find 100 companies that are growing at over 10%, that are starting to see free cash flow yields go up. And they're just taking the place of the zombie stocks on the S&P 500 over the next 5 and 10 years. And
all right, Kirk Spano, bullish on this break. Let's wrap it with something that's not as much fun as making money, and that's making war. Now, you used to talk about Iran being on the table a long time ago, Kirk, and sometimes things have a very long fuse. What do you think is going to happen? I know you think I think about you when I see this kind of news, and I say to myself, I wonder what Kirk is thinking when he's watching this.
So I think that Iran probably does something stupid, and Israel and the United States blow a whole bunch of things up. I think that it changes the dynamic on oil, because right now Russia and Iran are cheating on all the sanctions, which is, fine. I mean, honestly, there's good and bad on all this stuff, right? But I think that you're going to see oil get tighter for a very short period of time. Ultimately, the energy transition happens, but that takes a lot longer than I think your energy transition bulls think it's going to take. I originally thought that the energy transition could be largely accomplished by 2030. It's going to take longer.
Okay, so we're vulnerable to an oil shock if there's
Absolutely.
anything that happens in the Straits. And you used to, I know you have a new persona, but you used to talk about this as being, something that they had on the U.S. government has had on the table for a long time. So, their Netanyahu is helping them dust it off. And it sure looks like Iran says they don't want a war. And, no one wants a war, but we keep escalating towards war.
Iran doesn't want a war that they get shot back at, right? Yeah. They've been engaging in war for 4 decades now, and they just keep expanding it throughout the Middle East. And so I was at the Hard Energy Conference, and so you wanted to open this can of worms. I'll tell you what I heard there is the ex-CIA director, the one that whispered in George W. Bush's ear. I forget his name. It's Mike something. he said he wouldn't be surprised if there was a terrorist attack on the United States before the election. And the room got quiet. And that is a product of largely the Iranian-backed terrorist organizations, but also, we know at this point.
You mean the ones that posed as seeking sanctuary when they were coming across the border that are already here? Them?
I don't know what you're talking about.
Well, I mean, there were certainly were a lot of people coming through a porous border.
Yeah, but
for that to be feasible, right?
no, I mean, we've had sleeper cells here for decades, right?
Yeah.
I mean, that was stuff that went back,
Yeah,
to
9/11.
blame recent problems on recent events is I think naive. The idea that immigration has suddenly changed the nature of the country in a negative way belies centuries of history. Look, we've had the bad guys here for a long time. The bad guys have been everywhere for a long time. And it's not just Iran backing them. The disaffected people in Saudi Arabia who don't like the Saud family back them too. So they're all over the place. And what we need to be aware of is that for short periods of time, bad things can happen. There's no doubt about it. I expected this surge in volatility. I can't do it in my customer accounts because I'm regulated, but in my personal account, I owned VIX calls. You know what? I closed those on Monday morning. So I made 600% on that trade, 700% on that trade. So blaming immigration or blaming this or blaming that, look, it's a much bigger, slower moving thing that people want to attach a narrative to. And do I acknowledge that there can be another correction between now and whenever? Yeah, absolutely. There's always a risk of an event-driven thing. And somebody in the chat says, I'm not worried about a September, October plunge. No, I think you're seeing it right now. And as the buybacks come back and as liquidity gets added by the Fed and the Treasury, that's not really the problem. And the idea that if Harris wins, things go this way, or if Trump wins, things go that way. Yeah, over a longer period of time, that's true. I think that the Trump trade is stagflation. I think that the Harris trade is energy transition. And ultimately, the dollar gets a little bit weaker for a little while to push asset prices up so that we can afford the baby boomer retirement. And these are all the things that the big rich guys already know and they're already responding to and they're already investing in. So, I think it's more important that you look at the big picture, and if an event happens, well, you just have to wait it out sometimes. And if you can trade it because you see it a week early, God bless you, make a bunch of money. But, the reality is that most of this stuff is slower moving. Most of this stuff is forecastable out. I thought that there'd be an Iranian conflict. They've been much more savvy with how they've affected a quiet shadow war for a long time. And we haven't found a spot where we kill the Ayatollah Khamenei. We're just waiting for him to die because we're hoping there's a revolution when he dies. I mean, that really is the policy is, this dude's got to die someday. And what is he, 185 now? So, we're waiting.
I thought one of them already died.
Well, the main guy, the Grand Poobah is still around, isn't he?
I don't think so.
Yeah, his kid isn't in power yet.
Okay. All right. Well, Kirk, people are going to want to, I know you do a lot of writing. I'm not sure, do you have a website? I know you manage money as an RIA. How do people get a hold of you?
I am trying to find that for you right now. There it is. Hey. All right. So my investment letter website is Fundamental Trends. If you actually are looking for a money manager, it would be Blue Mound Asset Management. And that is at bluemoundam.com. But for most folks, the investment letter is the way to go. I do not cover futures. So that is, I think that makes me a good complement to ForexAnalytix because I think I've I know I've got a number of people that for my service over at ForexAnalytix. I cover stocks and options, and honestly, I have become a massive Bitcoin bull after being very skeptical and just trading it for years. But it is clear to me that Bitcoin I've been finishing everything with this. Look, Bitcoin is still going not just 100,000. I can't figure out a way that it doesn't go to 300,000 just on international adoption
Webinar online.
as a currency hedge. Ultimately, if we ever start buying pizza with Bitcoin, it goes way higher. But you're already seeing it as an international currency hedge being adopted by nations, and it is starting to be used in a handful of international settlements such as oil. So there's a lot out there that I think that you can make money on.
Okay, Kirk. I appreciate being able to hear you today.
Yeah, thanks for having me on. I look forward to these. I'm
Yep.
sorry that I missed the last one.
Oh yeah, it's okay. You didn't have to bring a note from Mom. You're human. So we'll talk in the fall again, see how things play out.
Yeah,
But you do, you know, your demeanor, you do calm down what a lot of people worry about. So, you know, it's kind of like a virus of worry out there, you know.
yeah. Well,
So
hey, bad things happen. However, you always got to go back to the first principle. The United States is a pretty good place, and the economy is pretty strong, and we recover from everything. We still are in a position to print money. Does that last forever? I don't know. I mean, we got pretty
yeah,
good geographic advantages. I don't think it changes this century, not in my lifetime. So,
okay, cool.
understand the big picture and what they're trying to do. They're trying to not have a debt crisis,
Yeah,
and
of course.
they're growing assets is the best
I
way
hope
to.
they could. I hope they're successful.
You don't think they'll be successful?
I hope they are. I
Oh, you
don't
hope they
know.
are.
Yeah,
I
I
think they
mean,
will
I
be.
don't have tremendous confidence in
It's-
the way the Fed has managed things.
I think they've done a pretty good job. I will tell you
All right.
that I will tell you that this has all been part of a bigger game. I think we overspent on COVID,
Yeah,
partially to offset the boomer crisis. And I'll finish with this. If we start doing austerity, everybody here should become a billionaire, because that'll be the easiest take everybody else's money trade in the history of the world. So if they do austerity, we will get a massive collapse, and you should be able to short the hell out of everything and buy volatility and gold to the moon and Bitcoin to the moon. Because when they reprint money, when they realize they screwed up, it'll
yeah,
just be the biggest spike, crash, and spike that you've ever seen. I
yeah.
don't think
Maybe
it's
we.
going to happen.
Yeah, okay. It's
I
just
don't.
gonna
I don't
be.
think that'll. I think you should get used to President Harris, but we'll
Oh
see.
yeah.
We'll see.
Okay. All right. Very interesting. Appreciate it. Kirk Spano, everyone. Find him on the X at his name at Kirk Spano, and check him out. He also has a very good technician with him, a friend and former mentee of mine, Scott Henderson. Scott's a great trader.
This is his chart right here.
He's insatiable about his work, and check him out. So thank you, buddy.
Have a fantastic quarter.
You too, man. Really appreciate the views. And we'll talk in October.
All right. Take care.
All right, Kirk Spano, everyone. We went overtime for you. People are thanking you, buddy.
All right.
So watch him. He does a lot of talks on X. I always see him out there. You could just jump in.
Yeah. Stocks on Spaces. Wolf Financial. He's got a pretty good. I would say Wolf Financial has impressed me. He's one of those millennials.
Yeah, he should have me on. I'm a
I will
boomer.
tell
I
him.
won't be
I will
around.
tell him.
I won't be around that much longer. Anyway, so I'm the end of your story. I'm the end of the beginning of your story. So Thanks, Kirk. Everyone have a good turnaround Tuesday. I still think the markets are in shock. Takes more than one day for dust to settle. Keep an open mind. It'll keep your account open. And above all, don't just count your pips, count your blessings. We'll see you tomorrow. Adios. Thanks, Kirk.
Take care.